What's up? It's your girl, Tisha Campbell. You will see me soon on the J Team with Miss JoJo Siwa playing a villain. And you are watching the Connect Network TV.
Well, welcome back, Texas. So I'm happy about learning from our next guest. She is truly a boss, and she's going to be dropping several dimes today about how to get some money, how to invest in companies, how to do it silently. So make sure you have the volume up. Today, Mollie Fehlig, owner of Her Digital Incubator, is with us today. She's a former Wall Street executive, and now she's a venture capitalist and an angel investor and advisor, and the founder, again, of Her Digital Incubator. Welcome to the show, girlfriend.
Hi, thank you so much for having me. I'm so excited to be here.
Welcome, Mollie. We're excited to have you here today, and we're excited to hear. Well, first and foremost, you're, like Natalie mentioned, you're a former Wall Street exec, and you now work with underrepresented founders. Is that correct?
That is correct.
Tell us about that switch.
Yeah, thank you. So I started in banking in 2004, summer analyst class. That used to be made me young, but probably not so much anymore. And then I worked in capital markets on the trading floor until 2016. So over an 11-year stint. And I then decided to take a little bit of a break and went out to the West Coast where actually all my family is based. I'm based in New York. And I just got really involved with more of the startup scene there. As you know, Silicon Valley tends to lead the way. And just as a former COO for trading businesses, my jam is really pitch decks and financial models, and was able to, just as an advisor and mentor, I got involved helping some female founders.
Please tell us what it's been like working with underrepresented founders.
Yeah, absolutely. So I did, after that, I did, got roped into going back to banking for another almost 4 years. But I stayed advising underrepresented founders, and specifically female founders at that time. And I had about a 4-year parallel path where I was getting more and more senior in banking, right? And I was continuing to help these founders. And it just became undeniably apparent to me that these founders knew their businesses, what they wanted to do inside and out, right? Maybe they didn't know exactly what a CAC was or an LTV was or a gross margin was, but like if you said, talk to them about their business and how they were going to operate and what they were selling and who they were going after in terms of their target market, knew what they were talking about. And this in juxtaposition with a lot of the senior guys I was working with, on Wall Street, that just had this abundance of confidence in what they were saying. But often you were like, well, I don't even know if that makes sense, right? And so it became so absolutely clear to me that, first of all, that first moment of handing a P&L to someone, and I love you traders that I worked with for all those years, but none of you ever cried when I gave you your P&L. So having someone cry, knowing that I could help, and also this isn't charity. Like, founders that are underrepresented historically and are proven to do more with less, right? And are also undervalued by society. And so my decision to become, a founder of an incubator program with my angel network, the Council Angels, because I'm an angel investor, it's to empower underrepresented founders, peel back the curtain, and have real conversations with, real angel and VC investors, because I also am a venture capitalist investor.
Most business owners, you hear in 5 years, fill in the blank should happen, or you're not in business, or you don't need to be in business. How much growth should a company expect in its first 5 years?
It's a really good question, and I get it a lot. And first answer, it depends on your sector. Tech growth rates are much different than CPG growth rates, right? Is because, you have a lot of upfront costs to build technology platforms, but then apps, you can really grow very quickly. Whereas CPG, you're always going to have that inventory that you're buying, right? And so it depends. I think a myth so unfortunately, I don't have one answer for you. The myth to debunk is that you're not expected to be profitable in the first few years. Like, because if you are, that means you're not reinvesting back in your company. So you are absolutely not expected. What you need to prove is that, again, it sounds so simple, but like it's very hard, that there is actually a need in the market, objectively, not you, your friends or family. There's a need, white space, we call it, in the market that you're addressing, and you have objective proof that people are saying, yes, I want this. And then how many people, the size of how big you could get and your revenue potential is based on how many people have you identified your target market, and then how effectively are you going to implement your strategy, meaning grow without spending a lot on marketing and have a good business model. So that in the very early stage, those are the elements that an investor wants to see versus an actual, hard line of growth.
I love it. Mollie Fehlig for the win. Thanks, Mollie.
Man, I hope everyone turned up their TV for that. It was so informative. I feel like I got a little bit more educated, and I'm just so thankful. I'm going to watch this on rerun, too. I can't wait. All right, well, thank you so much, Mollie, for being with us. It was so much fun. We really appreciate you. Everyone, stay tuned because we have more Girl Boss Magic coming up next.